Welcome to the Closing Beat, a live show where we cover the stock market, financial tips to get your dough straight, and sometimes Disney World. Wait, seriously? Disney World? All right then. The Closing Beat, presented by Jazz Wealth.
The Closing Beat. How's everybody doing today? Happy Thursday already? Come on with this now. The days and weeks are going by so quick. It is Wine and Wealth night. So tonight, actually, for our Wine and Wealth, if you are one of our clients, we will be going over the retirement planner. It is going to be sweet. So it's live, it's up there. We're going to make sure everybody has access to it. And it's rolled out so we can actually start going through that and you can see all your data. We built the whole thing in-house, so we look forward to feedback and actually making any changes that we can along the way, because that's what we do here. We just build our own stuff. We got our own in-house development. And so far, so good. Anyways, talking about the stock market here today. Finally, a little green on the screen, huh? That's nice. We've had a record string of down days here. If we go over to the charts and take a look, let's see if we can go over here. We're still in no man's land, would be the easy way to say it. Anybody that thinks they know where the market's going to go from here is purely guessing. I would go based on the stats, though, and say about mid-month, we look forward to maybe the beginning of the Santa Claus rally. We're going to have a Santa Claus rally or the inverted Santa Claus rally. Huh? How's that going to go there? Today's news actually helped us out because what we had, like we've been talking about, bad news for the economy is good news for the stock market. The initial jobless claims actually ticked a little bit higher there. That's good, right? It feels weird, doesn't it? Feels a little weird there. It's not really clear, this latest data point, if you were to dig into it and you're an econ nut like I am, because the data's a little bit choppy. And actually, if you look back at the stats, this particular week, 80% of the time the jobless claims tick higher. What does that mean? That's when they say on TV, the seasonality of the job, that's the seasonality, right? It's just normal for this time of year to see a little uptick there. And so we normally do see it uptick. Again, 80% of the time that happens. You also have news out of China that they have heard the protests there. They are easing the lockdowns and quarantine restrictions there. Is that good or bad? You know, there's a lot of this stuff where it's like, you know, I don't know if that's clearly good news, or in the econ sense, if the bad economic news is good for the stock market. I'm just not really sure. It's good for our Chinese positions. Those were our best performers here today in our international fund. We manage our own funds here, so we have our own positions, and clients can see all of that, so they can play along with us. So I'm happy about that, but and it looks good for their economy as well, right? They're locked down. They're not buying as much stuff. Singles Day wasn't a big a deal this year. So you're like, all right, well, that drives their economy, but then doesn't that hurt inflation? Right? So best case scenario, they slowly open their economy. I mean, you want people to be free and do what they got to do. It's a different world over there, but you want that to happen. But then again, if they go spending money and they're out there doing their normal things, then that's going to hurt global inflation, which is a problem, which means the Fed maybe not maybe not stopping raising their rates. So you see how all this is kind of going along right now? It's like, that's where the market's sitting. And that's why I think we see this market doing what it's doing right now. Is like, yeah, it sounds like good news. I just don't know what we're supposed to do there. Also, Bank of America did a study, and I think it's a recurring survey that they do. They basically polled fund managers, and they asked them a bunch of questions. We get the same one here, too. And 77% of us responded back saying that there will be a recession in the next 12 months, sometime before the next 12 months, right? So there's a little bit of a fear of that as well. Well, actually, a lot, right? Now, how can we verify that? What if Bank of America is just putting out data? Like, what if I just answered it and said, yeah, recession, 12 months, and I misunderstood the question? What if a lot of fund managers misunderstood the question? How can we verify that people genuinely believe that we may be heading into a weaker time period? Maybe not a recession, but you get what I'm saying there, right? Well, one way you can do that, you can just type in the ticker symbol XLP. So if I type in that ticker symbol, what is that? And I got to hit the enter button to get it to actually go over there. The XLP is consumer defensive stocks, stocks that are not as prone to the normal ebbs and flows of an economic cycle. So what can we see here? It's dramatically outperforming the S&P. So here's the S&P. We'll just flip back over there so you can see. Well, it doesn't look the same. Let's go back to XLP. Just do a quick little analysis here. If we're elementary school students, you're trying to teach students how this works or something, that's clear as day. Money's going over there. If money's going over there, that means there's more buyers than sellers. If there's more buyers than sellers, that means people genuinely want to participate in what are normally slow, boring, dividend-paying stocks that just kind of trudge along and do their thing. So that's a way that we can confirm, yeah, that's probably right. People are positioning for a recession, a weaker market, a weaker economy, and all that stuff because of how strong this is. It's severely overbought. I'm going to do one step further for you. If you're looking in this sector and you're saying, well, I feel the same way. I would like to participate. What can you do? Well, currently, this is easy to see. It's in an uptrend, right? So are we going with the trend? Yes. Do you want to just buy any stock in there? I don't know, right? If we start looking at something like, oh, I typed it wrong. Sorry. If we start looking at something like Tyson, well, this is not going along. This is a consumer defensive stock or consumer staple stock, and it's not going along with it. Why? We're not going to eat chicken? What's going on here? They've had some problems this year, both in the family as well as the company. We won't go into that again. We've all been there, right? But so clearly it's not performing. This is the most oversold stock in the consumer staple sector. So you say, I like buying those things. If that's you, this is where you're looking. That's not an easy place to look, but there you go. What's the best performing, most overbought stock, meaning it's performing way beyond the sector there? That'd be Campbell's Soup. You're killing it. Selling a lot of soup, the lower end value soup that they have, but they're selling it, so that's it. General Mills. Okay, we're going to eat soup and we're going to eat cereal, but we're not going to eat chicken. All right, there you go. That's the second most overbought. And then we're going to put some jelly on that soup, right? So we got Smucker's over here. These are the top 3 most overbought stocks in the consumer staples sector. And then I, of course, included Tyson there as the most oversold. Kind of fun to look at, huh? So anyways, that's a fun, laid-back way of saying that's where the market's at the moment. Where the NASDAQ is at is a little different picture there. It was the best performer by far today, but it is the worst performer by far year to date. What do we do with that, huh? Let's go over here. Yeah, you can see it there. Here are the names that were helping out the NASDAQ today. Let's see if we can figure anything out. Okay, I'm sort of jokingly and smart alecky, kind of doing this here. But today, just for today, NVIDIA added the most amount of points to the NASDAQ. 22 points of the gains today, 120-something points, came from NVIDIA. 13 came from Apple. 11 came from Amazon. 10 came from Microsoft. That's interesting. Those are the stocks that have the biggest weighting in the market, NASDAQ and S&P, and they happen to be waking up. That's a little early to tell, I think, because it's just one day, but we know some of these have been really badly beaten down. So is this a change for these guys? There's Apple, still seems a little choppy, a little bit hard to understand there. Amazon, clearly oversold, way underperforming everything else. Are we turning the corner here? I don't know, to be honest, right? But it tells you that by looking at something like this, you go, I better keep an eye on those. I was interested in some of those. I better just kind of keep an eye and see what's going on here. Where do I not want to look? Why is the NASDAQ up today, but yet T-Mobile, which was one of the better performers year to date, T-Mobile loses or pulls 7 points away from what NVIDIA and Apple does. Alphabet just can't seem to get out of its own way. Tesla's kind of in the same boat there, and that's going to probably be like that for a while because you got a lot of headline risk with Tesla. So that's the case. But if you look over, you got Palo Alto Networks, Costco. We know that's been bleeding off a little bit here. Activision, they've got some things going on. Mondelez, we don't care about those customized Oreos that you can get. I mean, I do, but most people don't care about that. And so you go, okay, the stocks that are pulling down the index, aside from Alphabet and Tesla, they're not really big enough. The group here is not really big enough to weigh on the NASDAQ. So is that good or bad news? A little bit of good news there because we want the NASDAQ to giddy up now. Let's go. Come on. So good news there. If we were to look over here and see that these 4 names were still down here, there's almost no chance that the NASDAQ can move higher. And there's, kind of the same thing could be said about the S&P. So really, really interesting point of view there. And I'm just trying to, again, I'm not trying to sound, funny about it or anything, but take the lighthearted approach. Let's see what's going on. We do have that Wine and Wealth coming up tonight. I look forward to sharing that retirement planner with you. We've been working on it for months here. built the whole thing from scratch. We want everybody to see how much do you need to save in your various accounts and how do we come to that number? And not only that, can you save it? So if we have to come back, do we need to model scenarios against it? What other advisor can show you the software, right? Show you they're building it. What do you want? We're going to build it for you instead of just going and buying some software. If you're interested and you are a client, of course, I know you're interested. Yeah, come on. You got to be interested, right? You're just going to go on into the dojo. Let me zoom this out real quick and then I'll move on. You go on into the dojo, you're going to select classes and research, and right up here at the top, you're going to see a little red button start to tick. You'll get an email letting you know when we're live. When you come on in here, this thing's going to go blow up. It'll be a big screen, and my pretty face will be right there ready to hang out with you, so I hope you'll join us here tonight. Okay, let's move on. I'm going to go over here. We've been talking about energy. Notice how we try not to jump around. Got a lesson. We focus on that lesson in real time, share with you how it's going, if it's data-driven or whatever it is. What do we have going on here? The energy crude oil pair continues to come in. So we talked about this before. I probably don't need to go back and share those charts with you, but if you want a detailed explanation about what we were doing, that would be last night's Jazz After Dark, if you want to come hang out with us. But the point of today's story is to say that's still coming in. That won't happen forever, but it's still coming in. You got energy pulling back there. You got crude oil slowly pulling back. That works great for the pairs trade that we were talking about there. So very, very good. Sector-wise in the stock market there, uptrending sectors would still be the energy sector there. We already talked about consumer staples. You're going to look at financials very clearly in an uptrend and pulling back for you. Healthcare, which has been in fuego lately, continues to be really strong there. And the boring sectors, we talked about this. Industrials, yeah, you guys, you never ask me, like, what's this industrial stock doing? Yeah, it's boring, but that's where the money's going. So are basic materials. You got to think about that stuff if you're looking to chase where everybody else is at the moment. Stocks in the news here for the day, and then we'll get out of your way. General Electric, they had their investor day in New York here today. I'm not in New York. I don't know why I said that. And they're trying to spin off the GE Healthcare. They're broken into 3 categories. They said, well, we're just going to take GE Healthcare. We're going to make it ticker symbol GEHC. We're going to put it over there. But wait a minute. I own shares of General Electric. Will I be participating in this spinoff? Because I'm rightfully an owner of General Electric Healthcare as well. The way it's going to work is that this will happen right when we come back from the holidays, January 3rd. You'll come back and you will basically get, where did it go there? You'll get 1 share of GE Healthcare for every 3. Well, that makes sense, right? The company is largely broken into 3 categories. So you'll get 1 share for every 3 shares that you own of General Electric. That'll take effect January 3rd because that's how it works out for the holidays there. New York Times, they're on strike. Between 1,100 and 1,600 employees are on strike. They want better pay. They want to keep their pension. New York Times said, we're going to give you a 401k as well. You can choose between them. And people said, we don't like it. Not good enough. Actually, it was the company themselves that said, we're not going to go with all of these new requests, demands, whatever you want to call it. So they're on strike, but don't worry. If you like the New York Times, you can still get your articles today because they found like a skeleton crew or something. Tesla in the news there that Elon Musk is going to be doing something that we do here at Jazz Wealth, which is if you own shares of a company, then that's an asset. Can you borrow against that asset? Absolutely, right? You should be able to borrow against your assets if you want to. So a lot of our clients say that, and I don't want to sell. The stock market's down. Elon Musk, I don't want to sell my shares any more than he already has. I already have a big enough tax bill, right? I'd like to borrow money from my shares there. Elon Musk is doing that, or it is reported that he's going to do that. He will be looking to take some loans against his stock. It's very common for the rich people. We just provide it to those of you that have yet to become rich, right? You're getting there. ExxonMobil's in the news there. They see their earnings, first of all, and general cash flows doubling by 2027. Well, that's good news. What do investors want out of companies when the economy is predicted to get weaker? They want to see cash flows increase. They want to see earnings doing well there. They want to see that you're buying back their stock. And ExxonMobil said, as a kicker, we'll throw in $50 billion worth of share buybacks there. What happened to the stock today? It did bleed a little lower, I'll give you that, throughout the day. It gapped up on the news of all of that. Did bleed lower thanks to all that weakness in the sector, but ultimately finished higher. Unilever, we own this one. It's been a really good mover lately. And, you know, I don't know if you know, but Unilever bought Ben & Jerry's. I think there was a documentary made about it or something. How Ben and Jerry worked the deal to sell to Unilever and everything. Well, Unilever says we want to sell it. We're open for this. There's been a lot of ice cream transactions happening lately. Yesterday it was 2 private companies, so we didn't talk about it. But Unilever says we'd like to get rid of our ice cream there, and maybe if someone wants to buy it. How much did they say? It was in the billions. Unilever's looking for $3 billion. Maybe that's why Elon Musk is getting a loan against his shares. Maybe he wants to get into ice cream too. Yeah. It wouldn't be the weirdest thing we've heard all year, right? All right. What do we have here? Oh, tonight. So we got the Wine and Wealth at 8. At 7 Eastern time on YouTube, we're going to talk about 15 money saving and investment tricks that you can use. Rapid fire. It's a longer video, but we're going to go through 15 of them. Things I need you to think about. Money's getting tighter. You know it. Maybe you felt it already, but we know money's getting tighter. We got to do anything and everything we can to keep our dough straight. So tonight at 7, if you're interested, come on back to YouTube here. Come hang out with us. And then if you're a client, well, it's going to be a busy night for you, right? You got that going on. You got our private class going on. We got to do it, man. Yeah. All right. What's going on here? Yeah. Tesla ice cream. I wouldn't be opposed to a Tesla phone. I know there's been rumors of that over the years, and certainly there's an incentive for that to happen now. So that would be more interesting, I think, for Tesla than going into the car insurance business, although that's a given. They should just do that anyways. But could it be? I doubt it, right? What do we got here? Tesla ice cream, man, that's crazy. Ed says, what's your take on Solid Power? SLDP is the ticker symbol. Last I looked, it was not going well for these guys. Yeah, still not going well. How can you get excited about that? You can't see it. There you go. Now can you get excited about it? No. You got a very solid downtrending stock. If you were nervous about the stock market losing 5 days in a row, I can't even count that high. Look at all these numbers here, right? I can't say that's something I'd be interested in. If you're looking for a lottery ticket play, I know it's a long shot, but Carvana would be maybe more of a long shot, but I don't like SLDP. Hey, when you got a losing stock, there's Paul. When you got a losing stock in your IRA, do you dollar cost average your way out or just rip the Band-Aid off? That depends on every other position you have. Now, a lot of people have 5 positions in their IRA. I don't know why. So if you have the opportunity to use it in something consumer staples, financials, basic materials, industrials, and you're trying to get out of this one, I still would slowly pare out of it and move the money over to what's working. Because my hopes would be that on a pullback, money goes to value for a second, you get a little pop, and you say, great, I'm able to sell for at least a little bit better of a price, but now I can buy the pullback in something that I wanted to buy. So maybe a little bit more in depth than you were thinking, but for you, I'd do it. Sounds like several glasses Japanese. Yeah, we'll be on our last one because I can't hang. I can't hang. I'm about to start pouring tea in there and just telling you guys it's whiskey. Oh, man. You like Groupon long-term, put in a little money. That's a troublesome business. It's fine if people, when they have these holiday seasons where people get Groupons, but they don't actually use them. But it's just been hard for them to make any real consistent profit there. So for me, I would think if you're shooting for where can I make a 10% return on a stock pick or something, I just don't think they'd be on my list. Yep. Unlike most, I love industrials, basic materials, their products there. Yeah, there you go. So now you're already familiar with the sector there. This is your time to shine. You see the pullback there. Now you can go through your list. I would agree with their products as well. NVIDIA's going up. Should wait for a pullback to buy. That's really personal preference. There's a lot of people that are momentum investors or traders and things, and they look for things that somebody else has already decided to buy, and then they just try to hop on the trend there. I never really got into that. I like a discount, even if I have to wait for that discount. And ultimately, I'd have been better off just buying it on the way up. It just doesn't fit my eye very well. What you in trouble for, JB? What you do, man? You can tell me. I won't tell on you, man. Your secret's safe with all of us here. Well, what you did? I won't say anything. All right. All right. So I'm going to get ready for our classes tonight, and I hope you guys will join us there. I appreciate all your support and everything along the year. As we wrap up the year here, we want to share well wishes with you and however you celebrate your holidays. And I think this guy says it best, man. It's my favorite well wish of all time.
Fertig.